Hello, today we're going to be talking about what is a fair tax. The United States actually has a definition that Congress has used to call a fair tax, and it ranges between 23 and 30% of a national sales tax. This was proposed in 2005 and has not gone anywhere. But let's be honest, what the hell does fair really mean? Tell me. I looked up the definition of fair, and there really is no definition that everyone can agree upon. What we do know what taxes are, they're levies by the government, and we're going to talk briefly about most of the type of taxes that are used throughout the world. The most predominant tax, at least here in the United States in most places, is an income tax, which varies. It varies. There's some that are progressive, some that are not, but an income tax is obviously based upon the amount of money that you make. Then there's something called a flat tax, which is a tax that will be standard that runs across at the same percentage an entire range of people. There is also capital gains taxes, which are taxes that are set up to tax the profits that someone makes from financial institutions, bonds, cryptocurrency, savings, etc. The president has recently proposed an unrealized capital gains tax. Why is that important? Well, an unrealized capital gain tax means that you will be taxed on your profits at the end of the year, whether you sold it or not. Sounds crazy to me. Another common tax, mainly used here in America, but in municipalities, is a sales tax. Obviously, that's a percentage of a tax that's being tacked onto an item. The problem with this and other taxes is that, going back to the word fair, if there's a word fair, if there is a standard sales tax, if you're making $1 million or if you're making $100, you're going to pay the same percentage. Now there's also there's a wealth tax, and a wealth tax is based upon the net worth of an individual, his cash, property. It could be pensions, life insurance. And the difficulty in wealth tax is, what's to stop someone from moving their tax base to another country? It almost asks for fraud. And the other thing about a wealth tax, and we're going to go into in another discussion, is that it's been proven that if you move the wealth, if you tax the wealth of individuals at high levels, you collect less taxes. There are property taxes, as they're typically used in municipalities. There is something called a VAT tax, value-added tax. It's mainly used in Europe, where it's each step in the process, there's a tax assessed. Again, if there's a word fair, that's kind of unfair, because if this tax is going to be the same, a person with great wealth and a person with little wealth are going to pay the same tax. So that sort of gives a problem to the situation. There are consumption tax that we have that are used, not used in the United States. Another common tax is payroll taxes, where here in the United States there is FICA taxes, Social Security, Medicare taxes. They pose issues also. Another tax that countries use is a dividend tax. That's sort of like a tax that one would get with wealth. Other ways that companies raise money indirectly through taxes is through tariffs, where what the government does is on imported goods, they place a amount of a percentage onto that, which gets passed on to the consumer, and this also helps the tax base. The problem, again, it's if there's anything to fair, it's unfair because whether you make $1 million or you make $100, you're in the same situation. I'd like to thank you for your time. If you like the video, give me a thumbs up and have a great day.